Hello, everyone. It's Wednesday again, and it's noon, so it's time for Coś Osobliwego, something singular. And we have a great guest here today to talk about crypto, blockchain, and all these interesting things. This is Pete Earle, Senior Research Fellow at the American Institute for Economic Research, and a dictator for life. Is that who you are?
No, 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 no. That's a joke about the former I guess it's the former prime minister or president of Panama. Just
Oh, okay, okay. All right. Okay, well, it's Pete
it's
and
a strange note to start on, but okay.
oh, well, it's an interesting way to start, especially because of the topic of our conversation today that you've been investigating for more than a decade now, and
Yep.
that's
Hmm.
well, Bitcoin. Bitcoin is something that everybody talks about now. I'm not sure if everybody really
Hmm.
understands what they're talking about, but it definitely rings a bell. So, if you were to kind of explain to a person who is not really that involved in the discourse around Bitcoin, what
Hmm.
Bitcoin really is and why is there so much buzz around it, what would you say?
So crypto. Uh, Most people know about crypto. It's caught most people's attention because of the price rise.
Hmm.
But when people learn what it actually represents, it becomes an even greater source of fascination and interest. Bitcoin is a special form of digital currency. It's
Hmm.
called a peer to peer electronic cash system. That's the technical name that's actually in the paper that came out in the
Oh,
October 31st, 2008. Written by an individual or a team using the name, which is I think it's now been determined it's a false name. It's a pseudonym, Satoshi
Nakamoto.
Nakamoto,
Yeah. Hmm.
and it came out just when the world was kind of falling apart in the midst of the financial crisis. Lehman
Was it a
had
reaction?
collapsed.
Do you think it was a
I
reaction to the
think they had
financial
been
crisis?
working on it for a
Hmm.
while, but
Okay.
it made for a very opportune time to bring it out. And basically, so cryptocurrency is a special class of digital currency,
Hmm.
and what it really represents two things. It represents an ability to move money around confidentially and to insulate money against inflation.
Okay.
So it's viewed as a sort of a killer app for anybody who wants to avoid the pernicious effects of central banking, which is to say, inflation, the reduction of purchasing power, and in another sense, people who want to move money around confidentially, whether that is to avoid or evade, some would say taxes, to avoid the scrutiny of personal finance surveillance, that sort of thing.
Hmm. And so the beginnings were, I understand, very ambitious, but I think that the first years of Bitcoin's existence were not so like they were not infused with this much buzz in the sense that
Oh
people were
no.
mentioning it. Like some people would bring it up. I remember having a student like 8 years ago or so who was an extreme fan of Bitcoin,
Hmm.
sharing all the information he could with the class, but the rest of the class was like, okay, whatever. That's like your hobby.
Yeah, I heard about it on Reddit in 2010 or so, when it
Okay.
was still. I mean, I think Bitcoin was it was at least less than $5 per Bitcoin. It might have been even less than $1. I don't
Wow.
remember exactly, but I remember hearing about Pizza Day, and Pizza Day was in May of 2010. The first transaction involved trading. This is kind of a funny thing to think of. One individual exchanged
Hmm.
10,000 Bitcoin for two pizzas. Now, just as a
Wow.
reference
That
point,
sounds interesting in 2021.
each one of those pizzas would now cost about $270 million,
Hmm.
given the price appreciation. It's
All right.
tremendous.
Okay. So you've heard about it in 2010, and what was
Hmm.
your reaction?
I thought it sounded interesting, and I wanted to get more involved. I thought that I had no idea that it would ever rise in price the way it did, but I thought that the idea of this sort of uh, public blockchain with these sort of clever ways of reducing the single point of failure, or that single sort of source of authority in the middle of the banking system,
Hmm.
was very clever, and that
So
immediately made me want to
yeah,
learn more. Yeah, yeah,
reducing intermediaries kind of was
yeah, yeah.
the idea.
So
Hmm.
there's the way I think of it, the way I explain it is there's sort of a triangle of interrelated parts that really make Bitcoin and other cryptos what they are.
Yeah,
Bitcoin
yeah,
is really the first.
yeah,
Okay, the first is there's security,
yeah.
and then there's a market price, and then there's robustness, and they interact this way. The security of the blockchain, because you have all these miners getting together, and the miners basically process transactions. So if you do a transaction in Bitcoin, that transaction gets sent around to a number of miners. Those are individuals who process transactions. And they do this because when they process transactions, if they can do it quickest, they win Bitcoin. So
Mm-hmm.
basically, you have all these geographically dispersed in different kinds of miners.
But they're not real people. They're just algorithms, right? I
Well,
mean,
they're
there's obviously a
there's a
person
human
who
being
wants
who
it.
put them there,
Yeah,
but
yeah, but like essentially, if you were to really say who does the
yeah,
computation
yeah.
here,
I
yeah.
mean, so what it is essentially cryptographic type thing, and I think of it like a puzzle.
Mm-hmm.
There's a puzzle that has to be done in a certain amount of time. The first one who does it, it gets sent around to a number of other miners. They vindicate it or they verify it, and then it's verified. It's added to the blockchain. So you have that security creates market value.
Yeah.
That market value, in turn, so you have security, market value, and then that market value,
Robustness, you
that market
mentioned.
value brings in more miners,
Mm-hmm.
right? And that makes it more robust, which in turn increases the security.
Mm-hmm.
So the one thing that can happen in many of these cases, the one thing that can really sort of, well, the one risk of a small cryptocurrency or a new cryptocurrency, which uses this sort of thing, this proof of this proof of stake methodology, is that if one miner gets 51% of the hashing power, which is to say, gets 51% of the resources on the
Yeah.
network, they can, with 51%, it's like a democratic system, they can change the rules of what it takes to process a block.
Okay.
And when
And they
that
can say that the rules
happens,
will be harder this time.
or
for
that
instance.
they always get it no matter what, they can change the rules to whatever they want.
Okay.
And for that reason, that's the end. That's called a 51% attack. And that has happened to some coins.
Uh-huh.
But Bitcoin has now become so large in terms of the number of miners and the technological requirements for mining so high that it's really geographically dispersed, and it tends to be universities and
So it's highly unlikely.
it's very unlikely at this point that there would be a 51% attack.
Okay. Okay. So let's add one more thing to this
Mhm.
equation, and
Yep.
that would be blockchain itself, right?
Yes.
So the protocol for Bitcoin, but also many other things.
So what we're talking about here are Bitcoin is a public blockchain. Okay, anybody can see the blockchain. Anybody can try to mine. At this point, right now, it's the technological requirements are tremendous. But there was a time, maybe about 8 years ago, where you could mine blocks with a PC, and so a
Yeah.
lot of people got yeah. Sorry, guys. Too late, but there are other cryptos. If you're interested, you could mine in the same way now.
Dogecoin, not anymore. So
Doge, I don't know about anymore. That one's getting sophisticated, but there are a few. I mean, right now there are something like 6,000 cryptos out there. Now, I'll get back to the public versus blockchain, private blockchain
Yeah.
thing, but right now there are about 6,000 cryptos out there, but the vast majority of them are what I call orphans.
and they're ephemeral in the sense that they kind of
Yeah,
come and go,
they trade
right?
for very low prices, and those prices are basically an indication, a subjective indication, but an indication nevertheless of their value.
Mhm.
So there are no really great cryptos trading at 0.000001 dollars or whatever. That's just not going to happen. But anyway, so Bitcoin is a public blockchain. Anybody can see the transactions. Anyone can buy Bitcoin and do a transaction. Anyone can be a miner. I mean, you're never going to win any blocks if you don't have a supercomputer at this point, but
Yes.
it's still possible. But blockchain can be used privately as well. And a private blockchain essentially means that you don't have these groups of miners together. You have an authority. So by that, I mean Walmart can use a blockchain, a private blockchain, to
Mhm.
track the movement of goods.
Okay.
So when a good is, let's say, a tomato comes out of a field, at some point it gets marked. Tomato
Mhm.
came out here. It goes on the truck. That information gets added to a blockchain.
Mhm.
All that information
And you cannot
becomes,
manipulate it. It's
you-
impossible to manipulate that information.
so in a private blockchain, you probably could.
Oh no.
In a private blockchain, you could, because you have the company that's overseeing it. but because you have an authority that's overseeing it, so you don't have the same sort of 51%,
Get
consensus
it.
to take over. But there's no reason to do that, and also it's difficult to do because to anybody who's ever studied computer science, blockchains are like linked lists,
Hmm.
and that's, by the way, one of the reasons why blockchain has been difficult to use until recently. It was difficult to use in commercial transactions because once a transaction gets added to a block and that block gets added to a
Yeah.
blockchain, you can't reverse it out.
Well,
Well,
I
you'd
explain
have to
it.
do a
Yeah,
reverse transaction to reverse it out.
exactly.
You can't delete one that's already. You
Yeah.
can't remove a transaction that's already packaged into a block.
Well, that's something I explain to my students quite often as
Hmm.
sticky notes. Like when
Right,
you just
right.
use one, you cannot really stick
Hmm.
it back, right?
So
You have to go to the next
there
one.
are some schemes now to work around that. One of
Hmm.
them is you can have a side chain where transactions can go into temporarily, and you
Hmm.
could say, that could be tied to a business process. For example, you have 5 days to reverse a transaction that you don't like, and then after 5 days, that transaction would then be put into the rotation.
Hmm.
It would then be added to a package to a block, which would be added to the blockchain. But anyway, that makes it difficult. Even if it uses the same methodology of this sort of linked list type framework, that makes it difficult for even a private blockchain to back out a transaction or an
Hmm.
annotation.
Hmm.
But the idea is that you have this uncensorable, preferably uncensorable, sort of ledger that's being built where usually, whether it's for logistics or whether it's for record keeping, it's efficient, and entities can basically follow the movement of goods or something like that at every point
Hmm.
in the logistical routes that it follows.
Sure.
Yeah.
But I have heard also about like possibilities of using blockchain in various other ways. There were some countries like Estonia, I believe, that have
Mhm.
discussed using it for public administration for
Sure.
certain processes or even uncorrupted voting systems.
Yes.
So you
So
see a
so
lot of
that
that as well,
yeah,
or
that all ties to
potential.
the idea of like creating these sort of efficient, verifiable packages of data, um, either using so again, a private blockchain is going to be centralized. A public one is likely to be, not necessarily, but likely to be decentralized, like Bitcoin. But that's the basic idea: is that you have this uncensorable sort of list or sort of packages of data being added together that are easy to review, and just they represent a sort of an improvement over the traditional record keeping systems that we've had
Hmm.
with the past, records and all that sort of thing.
Okay, well, so the protocol itself is extremely promising in many
Hmm.
ways, I guess, and can be used to in many different applications, many different sectors for different types of problem solving tasks. But like, I'm just wondering about Bitcoin. Now, coming
Yep.
back to this, because obviously this is something that I guess is most interesting for most of the people.
Bitcoin is at the
Yeah,
center of the crypto universe.
it is,
It
right?
is the gold of the of if these were digital precious metals, Bitcoin would be gold.
Yeah, so it's like a proof of principle and also a proof of concept for blockchain per se, right? In a
Absolutely,
way.
yeah. And many of the cryptos which have been developed in the subsequent time period have been attempts to tweak Bitcoin. Few of them, not all, but there are a handful, but few of them have been radical sort of reimaginings. Most of them have
Uh-huh.
been based upon blockchain. Like, for example, I'm sorry, Bitcoin.
Bitcoin. Yeah.
So Bitcoin, for example, is not anonymous. People say it is. It's pseudonymous or pseudonymous. It's pseudonymous because if you don't change to choose your address will be the same in each transaction. What
Hmm.
that means is conceivably, if you took money from a bank, you put it into Bitcoin, then you did transactions. If the amounts were the same,
Hmm.
someone could conceivably look at the blockchain, because the blockchain is public, and
Yeah.
say this transaction comes up. We could probably say it's this person. You
Yeah.
can sort of narrow down the likelihood of who, that or where that transaction came from. However, there are some coins that do things that, so there's value add services that some wallets provide. A wallet is where your cryptocurrencies are held.
Hmm.
One of them is called coin mixing, which means if I do a transaction and somebody else does a transaction a second or two later, those two transactions get mixed for the
Hmm.
purposes of mining, and then they're put in separately. So it makes it that much harder to figure out whose transaction or whose. Coin
Okay.
mixing.
Okay.
There are also some wallets where every transaction you do, they change your address. So that makes it impossible, nearly impossible to figure out who's
Sure.
whose. So those are things that certain wallets do, but now there are coins which do that automatically. They automatically aggregate transactions. They automatically change wallet addresses with each transaction.
So that's an improvement,
Right, right.
Mm-hmm.
So a lot. That's exactly what my point was that some coins are taking the functionality which was available in wallets or on exchanges and basically adding those to the coin. Some are radically different retakes. I mean, we spoke about Ethereum at one point. Ethereum has some real novel characteristics, but it's still similar to Bitcoin in some ways.
Okay, so Ethereum is very often this number too, but before we get to Ethereum, because I think it's an interesting thing as well. Could you mention or perhaps enumerate some other promising coins apart from Bitcoin? Are there any like that you for instance pay attention to that you find promising in any way?
So some of the coins which do the things I just mentioned would be Cardano, Monero, I believe Dash. Some of those coins are similar to Bitcoin, but have built-in security features with Bitcoin, which Bitcoin didn't originally have.
Okay.
Right.
But still, you said Bitcoin is the gold, and it will. Would you say it will continue to be the gold? Because there's a lot of speculation these days. The price of Bitcoin is quite radical, I would say, in a way. I mean, unexpected, perhaps. Like at least like a decade ago, perhaps we did not expect it. Somehow, maybe some people did, but like majority did not. So
I was at a conference in maybe 2013, and someone said that Bitcoin is very promising, but it could never get above $400 a coin.
That's what I'm talking about. But we're there, and well, the question is, well, perhaps part of the question would be, how did it happen? But you partially explained it because you referred to the miners and the increasing numbers of miners, which obviously can lead to exponential results in sums.
There's a very virtuous positive feedback loop there.
That's the thing.
And as governments and government agencies, government central banks, currency boards, and so on, have, especially in the last year, entered into increasingly expansionary practices. We're starting to see signs of inflation already. That has fed into the popularity of Bitcoin.
Okay.
And also the acceptance of Bitcoin by more retailers, the sort of marketing value Bitcoin has received from people like Elon Musk has been invaluable, really.
So that's these are credentials, the trustworthiness, and also to some extent mainstreaming of the currency. As a currency that you can use also for other things, not just to collect more of it.
So more and more, Bitcoin looks less like. So people often ask me, will Bitcoin ever overtake or replace the dollar or the euro?
That's a great question. Would be my question too.
Right. I think that's very unlikely. The dollar has tremendous network characteristics, but I think it more and more will begin to look like a substitute or even a complement to gold. And I'll give you the difference. Substitute, of course, would be gold is a place where people put their money when they're worried about inflation, when they're worried about deflation. They can do the same. It basically is a way to anchor purchasing power. It's a store of value. Silver to a lesser extent, that sort of thing. Bitcoin, we've really only over prolonged periods of time seen it rise. It's not a great store of value because of the volatility. Although with the introduction of futures contracts and things like that, there are ways of hedging it. So conceivably, it could be. In fact, one of the futures exchanges just in the last week introduced minis, they're basically futures contracts which are retail sized. So conceivably, people could hedge even retail size, meaning regular people, not institutions or banks or whatever, could hedge their Bitcoin holdings. But so that's why I think that Bitcoin is not a substitute for gold, but a complement. In that, if you had, and I'm just going to use this as a nice round number, if you had $100 you wanted to protect from inflation, you could put that $100 into gold, or you could put that $100 into, say, Bitcoin. Conceivably, if you put it into gold, it's hard to convert back. You're not going to go into a store and use that. But I've heard of people saying, well, you could do a sort of an asset allocation. You could put 50 into gold and 50 into Bitcoin,
Yeah.
and gold stays steady. Bitcoin will move around. The likelihood of Bitcoin going to zero is increasingly low.
Mhm.
It's battle tested all the time. It's proving it's gaining more sort of network characteristics and positive feedback loops, as I described before.
So it
But
will not, you
also,
will not lose. Probably, maybe you will not win, but
you may put $50 in there
yeah.
and have 35 when you look at it
Yeah.
next. But I think that can happen with gold too.
Mhm.
The idea is that the likelihood of going to zero
It's
is
extremely low.
very low.
Mhm.
But the thing is, like, that money that's being held as Bitcoin is readily usable. It can be spent. It can be transferred into another form. It can be moved back into dollars or into euros or yen or whatever. So I don't see Bitcoin as a replacement for gold. I see it as a complement to it,
Mhm.
a way of sort of protecting your money from inflation, but leaving it in a form that's a little more readily usable than having gold bars or a
Mm.
gold coin or silver coins or something where you'd have to go to a precious metal store. And the other thing is that when you do that sort of thing, when you convert dollars to gold or vice versa, there's a record. There's a paper trail,
Yeah.
and some people want to avoid that.
Yeah. So for those people who kind of claim or would like to see Bitcoin as the next mainstream currency, that
I think it's very unlikely.
that's unlikely.
That's
so
my
that's
opinion.
Okay.
My opinion
Okay.
is that it's unlikely.
Mhm.
My view is that Bitcoin and other cryptos over the course of, I mean, I don't know, I can't talk about, hundreds of years from now, but I think Bitcoin is kind of like a life preserver. It's floating out there.
Mhm.
When the ship goes down or the oceans get rocky, you can jump and hold on to that for a while. And then when the seas settle, you can get back on the boat. You can
Oh,
go back
that's a
to
nice
mainstream
metaphor.
finance.
I kind of like it. So the future of Bitcoin is in that, as becoming like this addendum to your portfolio. Let's say you're investing in different things, and that will be one of those things that you invest in.
So there are some people who are going to want to use Bitcoin because it's not untraceable. It's more difficult to trace than dollars,
Mhm.
right? Uh, what I regularly hear is Bitcoin is money for drug dealers. It's money for human traffickers,
Yes.
and the answer is it can be used for all that. But I guarantee you, on any given day, 100 times, 1,000 times the number of dollars, a number of dollars are being used for that than Bitcoin.
That's a good point, actually. Yeah, thank you for
Yeah,
being very realistic here.
yeah, yeah.
Yeah. All right. So now to Ethereum. Just
Mhm.
a few words on that, because
Sure.
obviously, I have read about it like 4, maybe 5 years ago.
Mhm.
Invented by I believe a Russian.
Vitalik Buterin. I can't
We can
remember.
double check that. We can
Yeah.
double check that. But like, definitely, developed quite some time ago,
Mhm.
and now gaining recognition,
Yep.
attention.
Yep.
Why?
It recently, in the last couple of days, passed $3,000 per coin. So
Which is nothing in comparison to Bitcoin, but then again,
No,
it's
no,
quite
no, no.
interesting.
But there's a phenomenon which fans of Ethereum use, which they call the flippening, and that is they predict that at some point the the perks, the killer apps of Ethereum will overtake Bitcoin. And I'll tell you what that is. What
Great.
really makes Ethereum what it is the smart contracts. So built into the surface of the coin is the ability to program certain applications. So the most basic one, the most basic sort of use case is something along the lines of that. Say, Ola and I are going to do a transaction. She says, Pete, come over and fix my sink, whatever. So I say, okay. So she says, I'm going to give you Ethereum's $3,000 now. Ethereum is 3,000. So,
all right.
So I'm not that great of a plumber, but let's just say Ethereum was $200. She says, okay, so you send me an Ethereum, but I could just convert that into Bitcoin or cash and then never do the job.
Mm-hmm.
So what you can do is there's a language built into the Ethereum smart Ethereum coin called Solidity, which allows you to program functionality. So you could send me a coin, you could send me an Ethereum and say, when I enter this password, this becomes spendable.
Or but before I do,
yes,
it's not.
Right.
Yes.
Right.
Yes.
So basically what you've created is almost escrow. It's like money in escrow. Right. Or I suppose there's a lot of other uses than that, but that's the basic use case, is that you can have that, I can have that coin and see that you've sent it to me,
Mm-hmm.
and that now all it needs to do is be, say, activated or liberated or however you want to
Mm-hmm.
say it. I do the job, you determine that's okay, you do whatever you need to do to the code, and all of a sudden it has become my Ethereum.
Mm-hmm. Mm-hmm.
Right. So that's the killer app for Ethereum is smart contracts. And those uh, people say fanciful things like, it's customizable money or it's designer money.
Mm.
That's I guess that's a way to look at it. But it is an interesting twist on the classic cryptocurrency
It's
model.
interesting. So would that translate into scale of using Ethereum potentially for different, reasons, where Bitcoin, for instance, has not been explored because it doesn't have those functionalities or features?
So there's a group of people out there called Bitcoin maximalists, and
Hmm.
it's another.
Are there
It's
also Bitcoin minimalists and
Yes, those would be called uh, multi-coiners, or there's a
who
couple
are
of other
you?
terms.
Are you a
I'm
maximalist? Are you a
No, I'm
multi-coiner?
not. I'm a multi-coiner. I
Okay.
regret the economist in me believes that having a number of competing currency brings out the better in all of them. But
Mm.
but but so the maximalists will say we don't need Ethereum because anything we need can either be added to Bitcoin or it can be a wallet app. We should let Bitcoin be Bitcoin and grow, and everybody should use Bitcoin so more people have it, more sort of network dynamics, network effects, more feedback loops, all that sort of thing.
So they wouldn't
Makes it
welcome other
stronger.
coins
They
then.
don't.
They
They don't.
don't.
They
Okay.
don't.
Mm-hmm.
In fact, they call them, I'll use a pseudonym, they call them ship coins. Right.
Mm-hmm. Okay. So they're kind of like they would prefer a monopoly,
I,
Bitcoin
I,
monopoly in a way.
I think so. I
Yeah.
think I think there's that. I mean, I think what they think is that whichever the most, they don't like the competition, and they say, well, Bitcoin has vindicated itself, and they say all these other coins being introduced or these other coins sort of distract from Bitcoin, and they keep Bitcoin from getting the sort of, again, I use the term, sort of network effects that would make it a closer competitor to the dollar. But my personal view is that, following the writings of F.A. Hayek, what would really be great would be, Hayek was talking about paper money versus gold money and all that
Mm-hmm.
sort of thing. I think that what we have now, where you have other coins, allows for specialization, it allows for competition, and also, Bitcoin has responded well to competitors. It's driven innovation in wallets and that sort of thing. So I don't see any problem with many coin with multi coins, with a multi coin environment. Again, of the 6,000 coins out there, there's something like, I mean, I would bet there's 50, if there's 6,000 coins out there, I would say 5,800 of them, 5,700 of them are just nonsense or tokens, or they're abandoned. So
That's pretty much
it's
like in the
just,
startup world where most of
oh,
the,
that's
startup ideas are going to
you
fade
could look at
away.
it. You could look at it through an entrepreneurial lens and
Of
say,
course.
what percent of new businesses fail after 5 years,
Mm-hmm.
and what percent of them are just airdrops. So an airdrop is a coin where they create, they don't, mining doesn't create new coins. They just drop, say, 1,000,000 coins, and most of those are just sort of scammy schemes that people launch where they say,
Mm-hmm.
oh, here's a new coin called weed coin or whatever. Sorry, weed coin people, if your coin is legit. It's just one I've heard of. There are coins that come out. I remember that one. And
Olaf coin, we can create
yes,
that too.
exactly. Right.
We could do
So
that and stir things a little bit, right?
I mean,
Could we gain
it's.
something?
I think initially you might get some people to buy in, but I think ultimately now institutions, financial firms, banks, hedge funds, other financial technology companies are looking at the coin world very closely.
They prefer
So
stability.
I think they would look at that and immediately see it for what it was. And you might have some
Mm.
friends be interested, but it's going to take, more and more. It takes a real innovation, a real step forward in a new coin to rise into that, the top 10 level
Mm-hmm.
of coin
Mm-hmm.
usage. And
Mm-hmm.
that's also why, another thing I always tell people about this is like, it's not impossible that Bitcoin could disappear one day, or that another coin could come out that's just so much better
Mm-hmm.
that Bitcoin is immediately becomes an also ran, and slips down in usage and in market cap and all that. But the idea that crypto will ever disappear, or that Bitcoin will ever be banned, it's not going to happen.
Okay.
All over the world, as we sit here, there are groups of engineers, whether it's or programmers, whether it's a student in a dorm room,
Hmm.
people in a basement. We talk about skunkworks projects where programmers at some big company get together on weekends. They work on projects outside the realm
Hmm.
of the company, but they know each other.
Hmm.
All over the world, there are tons and tons of groups ranging from 1 to 50 people trying to come up with the next great crypto. It
Okay.
will never ever be suppressed at this
But will
point.
that, complement the existing crypto wallet, or really create a revolution? Because I like the comparison you made between Bitcoin and gold, saying that, okay, Bitcoin is not there to threaten gold, really. And it's not really there to threaten dollar either. It's just like another option.
Yeah.
So do you think we will go into the direction of expanding to more and more options? Or really, is there, I don't know, any idea where people say, oh, actually Bitcoin has not fulfilled its role, we need something definitely better, so we need to figure something out that will suppress Bitcoin and just be there instead?
So the Bitcoin has a couple of Achilles heels. Uh,
A couple, that's a lot. You die from
a
one.
few. One of its vulnerabilities is what we call on and off ramps, right?
Hmm.
So if you want Bitcoin, you've got to move cash into a broker, into a crypto exchange or an account or whatever. That is where regulators see you if you don't want to be seen, or where wallets are where the vulnerabilities are. So if you have your crypto in a wallet, a lot of times that's where theft happens or where people lose their
Yeah,
coins. So that's one thing.
I know
I've
such examples personally.
I've heard a
Yes.
lot of talk about this is very contentious, and I'm not a PhD physicist, but I've heard a lot of talk about quantum computing making it possible to crack cryptography.
Well, I
That's
have heard about that too.
it's a very
Yes.
contentious issue. I've heard arguments on both sides, but I mean, if you suddenly had a coin which did everything Bitcoin did and somehow didn't need a wallet, could circumvent the on and off ramps, and had some sort of definitive, verifiable protection from quantum computing, directed against cryptographic security.
I think the early stage of quantum computers, if they are implemented, will be very, very rocky, and
Yeah,
difficult.
yeah, yeah. But I
Hmm.
mean, if you suddenly had a coin that did those three things, right?
Yeah.
Albeit the use of wallets, it was impervious to quantum computing, and it was, say, what was the other thing I said before? There was something else. It evaded on and off
Yeah.
ramps. That would be a kill. That would be a coin that would conceivably dethrone Bitcoin.
Yeah. All right.
It seems like a
Okay.
tall order,
So
though.
so it is there is a possibility of that
Sure,
happening.
sure, yeah,
Okay.
yeah.
Okay, but now coming back to this interplay between Bitcoin and Ethereum
Hmm.
again, Bitcoin is a word we're more familiar with. Definitely,
Yep, yep.
it's more mainstream, as you said yourself. With Ethereum, more recent thing.
Yep.
Do you think it's going to grow the way Bitcoin does? I know these questions are always super hard, but what are your bets?
It probably will. I mean, I could see a world in which there were four currencies, four or five cryptocurrencies for really specific uses.
Hmm.
One for saving, one for spending, one for extra sort of security, that sort of thing. Again, it's probably true with the maximalists say. It's probably true that Bitcoin can do all those things, but maybe we don't want it to do all those things. Maybe we want that sort of natural
Hmm.
force of
Hmm.
diversification,
Hmm.
which makes us spread out
Hmm.
our resources among a number of different coins.
Yeah. And would you say that Ethereum is now more popular because of NFTs? Is there any relation?
That's
Tell me
part.
about it.
That's
This is like,
yeah.
yeah.
So NFTs are part of it, but also there's just a much broader awareness of crypto. I mean, even when Bitcoin ran up to 20,000 in 2017 and then
Hmm.
fell back down, that got a lot of people interested. But there's sort of a feedback cycle where the price goes up and people start
Hmm.
asking about it. I just had a friend of mine who I've known for years ask me yesterday,
Hmm.
"Can you tell me about Bitcoin?" And no doubt he's been watching it, and just for whatever reason, some trigger in his mind You know,
It's finally the time to
it's
get interested.
finally, yeah, it's finally the
Yeah.
time.
Isn't it too late though?
No, that's the thing. Is like people say, well, I wish I'd bought Bitcoin when it was 20 because now it's 50,000, and I've said, well, I'm not recommending. I don't make those kinds of recommendations, but you can buy $5 worth of Bitcoin. In
Yeah.
fact, there's a movement among the younger folks who are so wonderfully tech savvy, Gen Zs and some of the
Yeah. We're
younger
saying hello
millennials.
to our audience as
Oh,
well.
you guys. Yeah, so there's a movement among them to do something that they call stack and sats. And so, of course, the smallest increment of a Bitcoin is an 8 decimal place unit called a Satoshi or
Yeah.
a sat. So stack and sats, as these kids say, is every time you have $5 or $10, just buy a
Yeah.
small, hair's breadth,
Yeah.
just a tiny bit of Bitcoin. And then, as they see it, I'm not sure if this is realistic, but I mean, for many people now, $100,000 Bitcoin is baked in.
Yeah.
The
Well,
market
that's what I'm
likes
hearing.
round numbers,
Yeah.
and so as a trader for 20 years, I saw that. There's a certain point, whether it's 68 or 73, where 100 just seems to act like a magnet.
Yeah.
So a lot of people say that that's probably baked in. Another thing I hear people say is, what happens when 8 billion people find out that there'll never be more than 21 million
Yeah.
Bitcoin?
Because there is that kind of, this is a finite process.
Yeah. So
this is yet another thing that we should
right. So
talk
Bitcoin,
about.
there will never be more. Okay. We're going to put an asterisk there.
Yeah.
There will probably never be more. 99.9% likely never be more than 21 million Bitcoin. And in the way that there's a process called a halvening, where every couple of years the reward for mining a block goes down by half. That would mean that the last coins,
it's like the binary search algorithm,
right? So the last Bitcoin will be generated by mining in about, if all goes as it has been, in about 2150. But the
that's plenty of time.
That's plenty of time. I mean, I'll be a little bit old by then, but I still.
you will be that that
exoskeleton.
Exoskeleton.
I was going to say an elder statesman in 2150. Yeah, when I'm 170, 175 years old.
Yes.
But
in a cryonic facility.
Hopefully, yeah, or maybe my head in a jar like Futurama.
Hopefully not, though.
But at that point, I mean, there'll never be any more. So that quantitative limit to Bitcoin is what is added into the value that's produced by that process of security, mining, and then robustness of the mining community, adds value. And for that reason, the idea is that Bitcoin is basically inflation resistant.
Yes.
You cannot create any more than will eventually be created. The asterisk I added before has to do with the fact that if there ever were a 51% attack, that entity which gains 51% or more of the hashing power could change the limit.
Okay.
Conceivably, if all the miners got together and agreed to change the limit, they would. But that's difficult.
Is that doable?
It's very difficult to do.
There would have to be some sort of global consensus of
everyone
involved.
And some of these, and you pointed out yourself, a lot of these miners are Cray supercomputers sitting in a cave with a waterfall coming down, cooling them. So they're not really in a sort of a decision-making
they're
position.
already mentally in a cryonic facility.
Right. They don't have great discernment powers.
Okay, so all right, so that's kind of clear. And with Ethereum, you're saying that NFT is a part of it, but there's probably more.
Yeah, the NFT thing is more, to me, is more about mania than anything else.
So you think it will pass? It's just like because I'm really wondering. There are many people talking about it now.
There are applications for NFTs which I'm sure are hugely valuable and economically productive. But the kitty games, the kitty cat games, and all that stuff are not. It's difficult for me, and maybe I'm showing every day of my 50 years of age. It's difficult for me to see where
the value of
tens of thousands or hundreds of thousands of dollars are being directed at NFT marketplaces.
Well, but surely I think the attention that Ethereum currently gets is partially related with the rise of NFTs. Okay, so one more thing. I mean,
sure.
Not really one, but because I have many questions. But there's this thing that I want to ask you about because I have many friends who are really like very tech savvy and
Mhm.
very interested in technologies, but they share some concerns regarding Bitcoin, for instance, and the mining process.
Mhm.
And well, they have those more pro-environmental, let's say,
Oh,
perspectives where they say we're
yeah.
worried that maybe it's not okay to mine. Maybe it's a process that really damages, I don't know, the environment, and therefore I don't feel okay doing it. So there were some articles recently, quite a few, I have to tell you. I've noticed like a lot of traffic around
Mhm. Mhm.
these topics. So I guess the question I'd have is like, do you share any of these concerns, or do you think that in comparison with other damages, this is a minor one? I don't know.
Yeah, yeah,
What's your
yeah.
take on
So,
that?
so, so the the edifice, which are these governments and these government agencies, which are dedicating themselves and have, they've taken upon themselves the responsibility of creating and managing these fiat currencies like the dollar and such. And they have done vastly more damage. They do vastly more damage in one day than the electricity used to mine Bitcoin and the
Mm-hmm.
carbon footprint will ever do.
Mm-hmm.
To me, this is almost as shameless an attempt to sort of to defame Bitcoin as the Bitcoin is a currency for drugs and guns.
Mm-hmm.
That's they it's ludicrous. I mean, on the average day, whether it's the U.S. Mint or the Federal Reserve or whatever other government agencies are involved in say, monetary policy, whatever, use vastly more energy, create vastly more of a carbon footprint, and do more environmental damage than I think Bitcoin has done since its first arrival.
Okay.
And by the way, I mean,
Mm-hmm.
with a sounder currency, with um, people's ability to sort of protect their purchasing power and all that, we can then start to look at ways of mitigating any
Surely.
sort of
Yes.
environmental
Yes.
damage.
Yes.
So I
Yes.
think that's I just find those arguments shameless. I just say, really? I
Okay.
mean,
You
I
have a
don't know.
strong position on that, but
I do.
I understand because I actually saw articles that also were in line with what you're saying, that maybe we can introduce actually more environmental protection
Yeah.
through using such a transparent system that perhaps with future hardware will become, in fact, better. Who knows?
Yeah. I mean, that's something we can work on.
We
Something
can
we
work on
certainly
it.
can work on. Yeah.
Maybe we
Yeah.
could work on it if we combine that with quantum computers. So we're scared of quantum computers from the cryptographics perspective, let's say, but maybe we should look at them as an opportunity to actually, process also transactions, various
I
computational
know as
processes. I
sure
think,
as we're sitting
yeah.
here that if there is some cryptographic challenge, if quantum computing does allow for the compromise of cryptographic systems, it will not be very long before there's a new innovation behind it.
Yeah, I would think so too.
Ideas are it's an ever flowing sort of stream
Hmm.
of innovation that we sit amidst and or sit have around us. So I'm confident that any challenge to Bitcoin, whether it involves improving Bitcoin or a new cryptocurrency that replaces Bitcoin, the space of time won't be long before one
All
is
right.
addressed.
Okay. And the last final thing, obviously, it's worth following you, Peter C. Earle, on social media because you post a lot on these topics. But if somebody's interested in Bitcoin and is just starting, what
Mhm.
kind of resources would you recommend?
There's way more now than there were when I first got involved in it 10 years ago, 11 years
Yeah.
ago. I would say, you know, some people like to go to I mean, you know, Coinbase recently went public. There's a lot of resources there. Some people think
It's
that,
like a learning platform,
yeah,
right? Hmm.
right. But some people think that Coinbase is sort of like that's the uh, that's the establishment. So you can learn
And
so
who are
much.
the people in deep in the,
Yeah, financial, elitists and corporatists, people who have financial interests in line with the government. I mean, Reddit, Twitter, there's a plethora of information out there.
Oh.
And oftentimes you can just ask somebody and they might be rude, but you can eventually find somebody who's
Better
polite
rude
about
and
it.
smart than
Yeah,
not
I mean,
rude
it's
and
anything worth learning is involves challenges, right? And
okay.
so, yeah, there's tons of resources out there, most of which are readily available.
All right. Thank you so much. Thank you, Pete, for your time. And I hope we'll have an opportunity to talk about Bitcoin again.
Yeah,
Thank you so
great.
much.
Thanks for
That's
having
been
me.
great.